All right. What up, everyone? What's going on, traders? Today, we are going to give an update on the 50K portfolio. All right. We can see the overall portfolio breakdown if you're new to the channel and new to, this little playlist that I'm starting here. All right. I have about 11% in SPY G. I have 1% in NNDM, 1% in BKKT, 10% in PHO, 43% in Gush, 5% in ZIM, 2% in Gilt, 2% in Fubo, 2% in Jumia, 4% in iClean, and 12% in KMB. You breaks it down by sector allocation and then also asset allocation. Okay, you can see that this is a very big on dividends, right? I have 63% of the portfolio is in dividends. All right, about 1% in cryptocurrency, 10% in water. All right, which I think is really important for the long term. And not financial advice. None of this video is financial advice, but in the future, we're expected to go on a global water shortage, water supply shortage. So it's really good to start thinking 10, 15, 20 years down the line. If we're having, issues with water supply, who's going to be positioned well for that, right? Well, the companies, managing that. All right. So there's, I think, a lot of growth in that sector, but it's much more of a long-term position, right? Some of these positions I'm getting in and out of trading, and we'll go over those and I'll give you guys an update on what things I'm buying and what things I'm selling each time I do that, right? I got 16.8, roughly 17% in ETFs, all right, 1% in biotech, and about 7% in growth stocks, all right? Sector allocation wise, right, I got about 11% in index funds, 10% in essential utilities, 43% in energy. I got 4% in clean energy, 3% in industrials, 1% in cannabis, 5% in tech, all right, and 20% in consumer discretionaries. Now, notice the very big overweight in energy, right? And this is also a big chunk of my dividend section. The reason that I'm very overweight in energy is because, you know, it's kind of the hedge against everything, right? I have a lot of tech positions, right? And I know some of these are broken down a little weird and you can't tell, but I'm pretty bullish on tech, but winter is coming, right? And we all know that, or generally, if you don't know, winter is going to cause a price rise in energy. All right. On top of that, we have the OPEC situation, right, where they're cutting millions of barrels of supply of oil. Okay. And there's just a lot of other things going on. So energy is a very good hedge. I'm very overweight in energy. And it's been my best position by far, right? It's paid off very, very well. We'll go into those gains. Currently, all right, I have about $38,000 invested, right? I have 12,049 in cash because I like to sell some cash secured puts. I like to sell call options, right? That's known as the wheel strategy, right? When you're running the wheel and you're selling calls and puts on the stocks that you own. So it's always good to keep some cash handy for that strategy. And then, we got about 500 in monthly deposits coming in. All right, currently I'm up about 5% more than I was in the last video. Current gains are at 14.48%. Now, the way this is calculated, it's not off of the total 50K, right? There's really about 56,000 in this account, but on the initial 38,000 that it was invested, okay, I'm up nearly 14.5% on that. If we take a look at the dividends, okay, annual dividends going to be bringing in about 3,481. Monthly average is 290. That's about a 9% yield. All right. So we'll break down my dividend stocks real quick and you can go ahead and see what those are. All right. So ZIM Integrated Shipping Services. You probably see their containers, a lot if you live anywhere near a port or anything like that. They do a lot of intermodal freight and international shipping. All right. This by far has the largest dividend yield and is pretty much almost the sole reason that I own this. All right. The current yield is 114%. Yes, you are reading that right. Okay. Now there's many shipping stocks that offer really great yields on their dividends, especially. But you have to ask yourself a couple questions. Why is their dividend so high? Maybe they're trying to do that to attract investors because they need money, or there's a couple other things, right? So I'm not trying to try to tell anybody to go buy this just because I have it and it has a very high dividend yield. If you look, all right, I am down on that position 9%. Okay, there's a few positions I'm down on, a few positions I'm up on, right? This right here is Gush. Okay, this is my energy play, all right? Energy right here, all right? And you can see that there's a 2.52% dividend yield. Okay, they pay about 443, per share, dividend per share, and annually that'll bring in about 487, right? And completely passive income, right? We look at that position, it's up 59%. Now this is the bullish 2x ETF, right? So if I would have gotten in, just a regular energy play, it'd be roughly about a 30% gain. But given all of the things that I went over with you guys, that's kind of why I have so much energy. If you look, I've got about 110 shares. That's enough to sell covered calls. All right. And I'll go over that. If we come over and look at the options tab, all right. I didn't sell too many options this Friday. Friday was a really, really weird day, honestly. But I went over here and I sold some cash secured puts on Bingo. All right, BNGO. I got about $9 in premium on that. Those expire November 18th, and the 1.5 strike, right? We can take a look at what my current price is on Bingo. This is my biotech play. And biotech has been a little bit of a defensive play, and has gotten a lot of interest and done pretty well compared to the rest of the market. Maybe not just Bingo, but there's a lot of other plays as well, besides those that you could look into, right? Now, my average cost is $2.10 a share. So, if it falls down to 1.5 and is trading below $1.50 by November 18th, I'll be happy to lower my average cost basis. And collecting about $9 in premium is roughly, like 4 shares, right? I'm basically getting like 4 or 5 shares for free if I wanted to, use that money to purchase more shares of Bingo. I could buy 105 technically with that. Now, it also would lower my average cost basis, being that I collected $9. That would lower the average cost basis for the shares. But really, I just keep that cash to the side. And if we look, all in all, I sold those puts. Gush, I sold some calls, right? Those were a $1 premium, so that's about $100 on the option contract, right? Each option contract is for 100 shares. So, $1 times 100 shares is $100 that I was able to collect, right? I sold some covered calls on PHO, that's the water ETF. And then I sold some cash secured puts on SPY-G. Now, SPY-G is the S&P 500 growth sector. And it's basically got some of the top growth companies in the S&P 500. I really like that ETF a lot. One, because it's cheap. It's 51.81 is the current price. All right, I sold the 45 puts on it, which is lower than my average cost. If we go to my average cost on SPY-G, you can see that I'm roughly at $50.56 a share. And I currently own about 100 shares. All right. So I could have sold some covered calls on it this Friday, but I didn't. I really didn't sell too many options. But I wouldn't mind owning 100 shares of SPY-G to hold if it falls below 45 by November 18th. There's a couple reasons for this, right? We have the midterm elections coming up. If you look historically, all right, midterms have always, ever since they've started doing them, we have been green 12 months out in the future every time, right? And also from November to June, we've been green every time after the midterm election. So, I'm really kind of just gathering up and selling some stuff, for this November expiration, just in case things fall and we get a crash right before that possible midterm election cycle rally. So that's really it. All in all, I only collected about $150, $149 in premium. All right, but that brought the account value up to about $56,438. Relative to the portfolio, that was a 0.26% gain. And I like to do this every week. I like to sell some, cash secured puts or some covered calls every week. Again, this Friday was pretty strange to me, honestly. There's a lot of bad things going on and the market rallied really hard. There's news of Elon Musk, having to dump his shares to buy Twitter, and we see Tesla raging. So, I didn't want to go too heavy on them. and really just, a little bit risky. Okay. Selling option contracts. All right. So back to the portfolio. Things are looking good. Got plenty of cash, 12,000 now. I'm looking to increase some positions in bingo. Okay. BNGO. Looking to increase some positions on Fubo. And slowly I just want to accumulate iClean. This is the global clean energy ETF. And again, I'm very big on energy, right? We can see my big energy position there. This is much more of a long-term position, right? This Gus trade is just that. This is a trade, and got into it in the very beginning of the year, and it's been working out very, very well. But iClean, clean energy is here to stay, and it's something that everyone is focused on, and it's a big priority, for the humankind as a whole, right? We need to find clean, renewable energy, and hopefully, as that develops, companies inside of iClean will start to improve, and improve in the future. All right, so I like bingo a lot. Fubo has so much hype around it. All right. I'm actually down about 9% on my Fubo position. My average cost is 406. So as this thing is dropping lower, all right, I'm going to be adding more to this position, using some of the cash that I have available. And also I may start trimming Gush. All right. I have about 110 shares. So, if I sold one share of Gush, it's currently about 176, right? I can come in here and buy a lot of shares of Fubo, just off of one share of Gush, right? So that's what I'm looking to do right now. BKKT is a really interesting play. I do have a little bit of exposure to crypto. If you look, that was up 7% on Friday. I'm up about 3% total on that position, but it's a pretty light position. I only have 200 shares with an average cost basis of 2.16. But the parent company that owns BKKT is the ICE. Well, guess who the ICE also owns? The New York Stock Exchange. So once crypto regulation does happen, you have to ask yourself, what companies are going to be really positioned for it? And I think that BKKT being owned by ICE, that owns the New York Stock Exchange, I think that they're going to be a company that's really well positioned for it, and is going to have a lot of the members on its team, that can help set it up and establish some really nice positions on it. All right, so that's it for today's video. Just give an update. All right, we're up about 5% since the last video on the portfolio. We love that. We love that. But it is a very tough bear market, and it's going to be very tough to navigate. Having some dividend stocks and then having the ability to own 100 shares or more and come in here and sell options, to collect a little bit of premium. I mean, that's $150 in one day, able to collect, right? So that's it for the video. Appreciate you watching. Smash the like button, subscribe to the channel if you're new, and I'm out.